Buying a house is a big investment. It can come with a lot of hidden expenses too, like repairs that you didn't know that you were going to have to make, higher utility costs, even homeowner association fees. And to soften the blow, I'm going to give you 5 ways that you can save some money even after you've bought a home. Now, if you bought a home last year, and I just want to make sure that you're aware of these opportunities for tax credits and deductions. So if you own real estate, you can actually get some amazing savings on taxes and the equity buildup at the same time. So number 1, deduction of mortgage interest and property taxes. So the largest tax benefit that you'll get when you purchase a home is the ability to deduct mortgage interest and the property tax from your taxable income. Now it's pretty simple. Your lender is going to send you a 1098 form at the end of the year with the mortgage interest that you've paid. And this information you can use on your taxes for that year. If you've paid your property taxes into your lender's escrow account, then this information will also be on that form because that's a deduction. And if you pay them directly to the county, just keep your records for when you make your payments because you can save this big time when your taxes come due at the end of the year. Now there's 2 important things to remember, and that's A, if a homeowner uses the escrow account, that is, the bank is paying your mortgage payment, the escrow account, the owner cannot deduct the tax payments into this account. You have to wait because the property taxes will only be deductible when they're paid to the county. Okay, and B, depending on how taxes are paid in your state and depending on that county, during the year that it was purchased, you may have to reimburse the seller for the taxes that are paid in advance. Now you want to look on your HUD statement or your final statement of your home to check to see if this reimbursement and how it was applied and how it was prorated. So if it's listed, bring your tax statement to your accountant with you. The number 2 big thing is the tax deduction for mortgage insurance premiums. Now, if you put down less than 20% down on your home purchase, you'll be required to get mortgage insurance, which is charged through your lender. Now, depending on your state and the borrower, it may not be that expensive. It can be anything from a few bucks a month to a couple $100. Now, there is a perk to this though. Depending upon the current tax law in your adjusted income, the homeowner can be able to deduct some of this from your mortgage liability. Number 3, remember renewable energy tax perks. Now, you cannot get tax credits anymore from building or owning an energy efficient home. That perk ended in 2021, but you can get tax credits on your home for renewable energy products. And it doesn't matter if it's an existing home or new construction either. So you can get up to 26% tax credit if your home has any of the following: geothermal heat pumps, small wind turbines, a solar energy systems, a fuel cell, or a biomass fuel stove. Now, the real estate market continues to be crazy, and property values and rental prices seem to be skyrocketing as fast as the cost of gas. And homes are flying off the market. But even in a good economy, a bad economy, real estate investments have been consistent and have one thing in common. Many people who own real estate absolutely love the tax deductions and the tax advantages. Now, number 4, this is when you have a rental property. Rental property deductions, besides the potential for regular income, equity growth, real estate investments, and other offer you many deductions that can reduce your actual income tax on your regular income. So, as a rental property owner, you can deduct various expenses such as that relate to buying, operating, and maintaining the property. Now, here's a rundown of the most common deductions. The mortgage interest deduction. You can deduct the interest up to $750,000 or $1 million if you took that mortgage out before December 16th, 2017. Now, this interest deduction relates to the secured mortgage debt. This is on your first or your second home. If you have other rental properties, other investment properties, you can deduct that mortgage interest on a business expense. Here's the number 5 property deduction is if rental property depreciation. Now, depreciation lets you deduct the costs of the property's useful life. The IRS lets you take a deduction off of your taxes. This deduction spreads the costs of depreciation over 27 and a half years if you A, own the property, B, use the property for your business or rental income producing activity, C, the rental property has been determined a useful life, meaning something that wears out, it decays or gets used up or becomes obsolete or loses its value. D, if you expect the property to last for more than 1 year. E, if the property was not placed into service or disposed of, like, no longer used in business during the same year. Now here's the warning I want to tell you about. If you have land, land is not depreciable. Why? Because it never gets used up. Likewise, you generally can't depreciate the cost for landscaping because those activities are considered part of the cost of the land and not the buildings. But like if you do repairs or improvements, that is a deduction. Here's the A. A repair keeps your rental property in good condition and is deductible. It's an expense in the year that you paid for it. The repairs could include like painting, fixing a broken toilet, or even replacing, a faulty light switch, like this one, like that one. On the other hand, improvements. If you add value to your property, they're not deductible for when you paid for them, but they're deductible over recovery costs of improving or buying a property over time. And this is by depreciating the expense over the property's useful life. So improvements might include a new roof, a patio, or a garage. Now, one property deduction is the taxes that you pay on the property. So this is an ongoing expense for rental property owners, and homeowners can deduct up to $10,000 or $5,000 if married or filing separately. You can also deduct the travel expenses. This is the money that you spend on travel to collect the rent, to maintain your rental property. This is also deductible. And I know a lot of people who will travel to their oceanfront condo for these repairs. Let's talk about condos, condominiums. If the rental is a condominium, you can probably pay dues or assessments to maintain the common areas, like the lobbies, the elevators, or the pools. But when you rent out your condo, you can deduct these expenses as depreciation and the repairs, the interest, and taxes that all relate to this common area property. Now, other property tax deductions for rental properties are advertising, employees or independent contractors. How about home office expenses, insurance premiums, lawn care, professional services like accountants or your tax preparers or property managers and attorneys. You can also deduct utilities. Now, many who own real estate, and that is investors, who take advantage of a 1031 when they sell. Now, what is a 1031 exchange? So when you eventually sell a rental property, the property's value may have increased. And in some cases, you may have made some serious money. But when you sell, you may have made some serious money, but you're going to have to pay capital gains or depreciation taxes to recapture that. Now, many real estate investors will defer their taxes by using a 1031, which lets you swap one investment property for another. Now, I've done this as well myself. And my real estate team has also helped many people who have done this as well. Now, according to the IRS, the tax exchange properties must be like-kinded, meaning that they're the same in nature or character, and they differ only a little bit by quality or grade. So a rental property ownership tends to be the most profitable when you consider all of the tax rules. Now, since there's quite a few deductions available, and it pays to know which ones you qualify for, you can maximize your bottom line when you're having owner of a rental property. Now, it's essential to understand how the taxes work on your rental income and eventually the sale of your property. So for more guidance on this, with help with deductions, taxes, planning, be sure to consult with a tax accountant or a qualified tax professional. Just understand there's long-term strategies. So to still hold the value of a property, whether the economy goes up or whether the economy goes down, I just want you to think about this. Paying off your mortgage early, think about how your life would be. Think about the idea of owning property free and clear. Think about the value of bringing additional security to you and income. Now, in the case of real estate, even with the recent upward adjustments in mortgage rates, it's still at historic lows. So when you're considering the inflation that we're seeing and we're going to be seeing over the next few years, it's a factor in the true cost of what money is. Now, I'm not an accountant and I'm not an attorney, but I've been investing in real estate here for the last 36 years, and I want you to imagine what your rentals and your home, if you had those paid off. Imagine having additional streams of rental income coming to you. When I started investing, I was paying 11 and 13% mortgage rates. That's not what it is today. Yes, rates went up, but they're not at 11 or 13%. So, am I glad that I didn't listen to the knuckleheads and all the noise back then? Yes. I want you to think about homes' values of what they cost back in the 1960s. How much was a house? Now think about the cost of a house back in the 1970s. Think about it in the 80s. Think about it in the 90s, the 2000s. Did prices go up and down? Yeah. But overall, did they go up? Yes. So look for the long term. I'm not in the business of supplying financial advice, so speak to your financial advisor, but the idea of owning property during inflationary times is a pretty good idea. So wherever you are, whatever you're doing, I hope you're having a fantastic day. If you have any questions, pick up the phone, give us a call. My real estate team is here to help you. And if you're subscribed, I appreciate you watching, and I'll see you in the next video. Take care, guys.